Hey everyone, this is Mark. Um, I'm going to try and do a little bit of a presentation on value, um, and this is aimed at new traders, people who are trying to understand what the market does. Um, because when you're a new trader, there's so many things you don't know, and you're trying to figure out how to enter and exit trades and what's most logical, but you don't understand yet how the market moves or why it moves and what the expectations are. You're probably watching me, Zach, double smoked, 12 cylinder, get in and out of trades and be quite successful. Um, we have kind of the same understanding of the market. We trade differently, and it's just fine. Like yesterday, today, um, double smoke took a long, and I was waiting for it at the top. I didn't see the long. I was more thinking short, so I did just fine with what I'm doing. I'll show you where you can actually do well as long as you understand what direction you're going to. But I want to start off with some theoretical stuff. So, number one, value is a range. And I'm going to show you two different time frames. LTF, longer time frame or larger time frame, whatever you want to say, versus daily. Let's just ignore weekly right now. I don't want to throw too much complexity into the things. The market is either accepting prior value or it's rejecting it. End of story, full stop. Don't overcomplicate it. It's simply going to see if the value that was traded prior day or the last 2 days is still valid. Okay? When new information comes into the market, both LTF and daily values will change. And I will show you that as well. Finally, in a given day, if you're projecting where the ATR should be or the average trading range, based on some calculations you can do for the prior couple days, you can project where that ATR should be and what we might test, because that's all the market is doing is testing prior value. So I'm going to kind of show how we look at daily value versus ending value, projecting the value for the next day. The next day's open price kind of lets you know where you are in that whole expected value area. We're going to then understand how to look at market profile, which is a 30-minute. And then we're going to combine market profile with point of control and value areas. And then we're going to look at market profiles over a couple days. You need to know what the last period of a market profile, which is the M period, what does it represent? And then we add VPA to the overall profile. Your job is to be the detective looking at all of this stuff to figure out where the market needs to go test things, and then is it accepted or rejected? Now, we can go back and test one level multiple times. And you can't just go because it rejected it once that it's not going to go test it again. Oh, shame on you if you think that. So, Camarilla pivots, if it's just another way to look at projecting where value should be traded today based on yesterday. So if this is today, the CP, the central pivot, is where the close is. and we're putting the S4 down here and the R4 up there. It's a mathematical projection of where we should trade the next day based on the high, the low, and the close. That's it. High, low, and close. So you can see high, low, and close. Nothing to do with open. Just high, low, and close. So it's a way to kind of look at where we should be trading. Now, what people forget in this is that on the prior day, we're going to trade in a range, but it's going to say where value was traded in a low and a high, and that's 70% of the volume around point of control. So when you look at value high, close, value low, we opened, rejected lower, traded up, went a little too high and came back. So what we're saying is that value is somewhere in this area for the next day if nothing new comes into play. And the same thing goes in the reverse. So if we're on a downward, right, on a candle, we should be setting, coming back and testing value high. If we reject that, and that's your job to see if it's rejecting at the appropriate place. I'll show you some examples. And then voila. So if we're going to trade here, do we start off by trading up here and trading all the way down and then back? Do we start down here, find support very quickly and trade all the way up? Do we simply trade by opening in the middle and trade up and down, and then where do we end up? There's lots of ways we can trade this expected value area on the day that it's going to open based on where it's opening and where we need to go and recheck prior day value low and prior day value high. So when we look at where we open based on projected value, is it weak or is it a very dangerous place? We're rejecting value, right? So this is, pay attention, people. This is probably too early, too fast, and we would probably have to come back. If you're a smart trader and you are willing to wait, then you can basically say that I can wait for price to come back and test value low, ending value low from the prior day. And you can see that somewhere between S3 and S4, okay? That's where value from prior day, if I'm a smart, seasoned trader, that's where I wait to get a good price entry. If I'm simply buying at the top of value, right? Why would I pay yesterday's top value price? I'm looking for a discounted value. Now, if we open way up here, we have a tendency to come back. And if we can't get back into value of prior day, everybody who was short up in here is going to feel a squeeze and will just squeeze out for the rest of the day. I'll show you some examples of that. Now let's talk about market profile. This is a Jim Dalton thing. If you haven't read his books or watched any of his master classes, you better get going. So I incorporate 3 distinct different ideologies. One is volume and price analysis by Anna Cooling. Then there's Jim Dalton, who talks about market profile. And then there's Franklin Ochoa, who talks about pivots, Camarilla pivots, and how to trade them. So when you're looking at a market profile for a day, there's letters A through M, each of these letters is a 30-minute period of time. And if we opened here, we tried to trade lower, didn't, traded higher, came back and held open price, higher, held open price, trade all the way up, and then we come back down, but we ended up holding above M low, okay? The candlestick for this day would look like this. That's open, that's closed. That's a green bodied candle with a wick on the top and a wick on the bottom. So the question is, what can we deduce from one day? Nothing. You need multiple days of exploration to understand, and I'll get to it in a minute. If you're using open, high, low, close, it would look like this. There's your open, there's your close. It matches up with the top and the bottom of the body of the candle. Now, what you can say is if POC was up here, we set value here, we closed at the bottom of value. That's not strength. It's not absolute weakness. Weakness would be we closed down here and we've rejected that value for the day. We're just hanging out at low value. This is slightly bullish. It's not bearish, but you now have to pay attention that the value. So if all the volume was set up here, were people just selling up here and were rejecting this? So you had rejection down here a little bit, and you have a lot of rejection up here. So what can we deduce? Still not a lot, but some. Okay, now we have 2 days. So we had value high, value low. We opened at the top of value, said no, explored lower, went back up, tried it again, rejected that, and we end at the bottom of M period close. And POC is lower. Now, if I put these two together, I'm getting a very good sense that this value range is being rejected. Okay? And actually, all you know is at the end we were rejecting this, but the entry was up here. If you're waiting to take an entry coming out the bottom of a value range, good friggin' luck. I've always known that if it's testing high and you're going low, your entry is on the opposite side of the range. If you're waiting to the middle of value to take an entry, it's a 50-50 chance that you go up or you go down. Okay, I called out M period. You got to know that's where we ended the day. And did we end strong or did we end weak? Now you add VPA, or volume and price analysis. When we have a lot of selling and selling and selling, and then we stabilize again, we're getting a reaction up here because value or volume is up. So when you're looking at a profile, it's multi-day value, right? So value was a little bit lower, the range, and it is always a range in a day. And I'll show you how to track it. Okay. Now I'm going to switch to a different type of asset class. This is a house. If you are going to buy a house, do you know if the house you're interested in is at value, overvalued, or undervalued? The only way you know that is comparables in your neighborhood on the same size house. That's like multi-day. It's comparables. One day does not give you enough information. One house price does not give you enough information. When you're looking at housing sales, if I want a good price, I'm waiting down here. I'm patient. I can wait. What happens is when you have people who become desperate that they need to buy, they will jack price up themselves because they have a bidding war because they want to get in. Also, same thing happens reverse. If we are selling and somebody's holding for a sale price up here, but prices start to fall, at what point do these people go, holy shit, I need to get out, and they will drop their price? Now, they don't have to. They can keep staying in that house as long as they want to. But the problem is if they're moving jobs and they got to get out, they got to get out. And that's where price comes, or excuse me, volume comes in at price. And you can see that on the depth of market, the DOM, as well as the pull stack or what's happening to the DOM. Finally, the market is moving 80% of the time sideways. So when we've set value here over multiple days, and this is not a day, multiple days, and we move up and we try higher, we come back down, are we finding support? What was the ceiling is now the floor, and then we rotate up and we get to the bottom, right? We're looking that we're going to probably break out the top. It's just what it is. Now, some people are perma bears. I started off that way. I'm doing much better in buying and selling in both directions. Are you a better trend or counter trend trader? You need to know if you're betting on trend or counter trend, and there's a way to see it. I'm going to use another analogy here. So new traders have to understand that if you were a pilot right now, you're learning how to fly a very simple airplane like a Cessna 152. It has flight controls. It's got one throttle. It's got a yoke. It's got an on-off switch. It's got a key to start the ignition. But when you're flying, other than communicating with people, which is here, and some engine instruments, you're flying the plane with this group of instruments. And almost every plane has a grouping like it. And we know what they are. And you can look up as a pilot and see what the plane is doing. And we call this a scan. As you get faster and faster airplanes, these instruments may move a little bit around the cockpit, and you have to update your scan, but you're looking for very specific things, okay? I fly Learjets now. Now, when I started, when I was 17 years old, I flew these guys, and it was intimidating as hell, okay? And then you go from a single engine, very simple, to a single engine complex, which means it now has a retractable gear and a variable pitch prop and is more high performance. Then you go from that to learn the instrument and fly on instruments, and then you upgrade to a twin engine, right? And the bigger the twin engine, it gets more complex, and then you're moving up to jet engines, and there's just more stuff. And it happens much faster. Your landing speed on this one is probably 60 miles an hour. You're landing at 120 to 180 in this thing. And it has a lot longer takeoff and landing requirement. If you thought you can fly a 152 and then think you're just going to jump in this thing and nail it, you'll probably die. I'm trying to put that analogy together for you as young traders. You are here. I'm here in trading. I'm coming up on 6 years of doing this. I've learned how to read the market, what it's doing, ATR, where's value. That's what I track, okay? So your job, what I do is I'm the detective. I read everything that's going on in the market. The seat time is critical. You need to understand it, but you have to have the seat time. Okay, now let's go and talk about how to understand what's going on. Some of you have seen some of my charts. I need to break this down first and foremost. This is the ES, okay? And right now, this is the 2025Z, or the December contract. I'm using this, and it does say I have to click on rollover, but I needed this to be able to show you what's happened over the last contract, which is 90 days. And if I zoom out, we can see what's happened over the last 90 days. Now I can't, because I have ETH in addition to RTH. So let me explain that first. I'm going to turn a couple other things off. What I have in here right now is this pink piece right here is the initial balance. What did we say? Now, did we try and come back into it? Yes, that was another shorting opportunity based on everything that I know about trading. The other piece, this piece here, is the volume profile for this day. And that is RTH, or regular trading hours for New York. Then we have settlement, okay? Settlement is simply the hour after close for them to settle things out. If you're taking into consideration what is happening here versus here, I feel sorry for you. Stop it. Then you have the Asian markets doing their things, and then you have the European markets doing theirs. And then we go back to the RTH. So how do you look at this? Okay, so let me turn some stuff off so it becomes simpler. I'm going to turn off the volume profile, and I'm going to turn off the initial balance. So I'm going to go to my studies. I'm going to go to this guy. I'm going to go to my initial balance right there, and I'm going to ignore that right now. Let's see, is that turning that off? It's not going to turn it off. Let me make it a black color. Then maybe it'll initial balance. Let me just set that to black so it's not as easy to be seen. There we go. The next thing is I'm going to go to studies and turn off my volume profile. Now I use all of this to make well-educated decisions, but you can simply use a market profile to understand what's going on. We'll go back and look at why we fell and what were the clues. So this is time, value high, and value low based on time. What I had before is value high and value low based on volume. And I can see that volume, or value of volume, was very much the same as time-based, right? When they become disconnected, it's a little harder. You can see again, volume was all here. Volume is spread out. I think POC is sitting up here because we shorted a lot right at prior value. I'm now going to turn off my extended trading hours, or electronic trading hours, basically ETH. So I only want to look at RTH, because if you're trading just during New York hours, that's all you care about. Stop looking at pre-market. And I'm serious. Stop looking at pre-market if you're trading RTH. So it's recalculating all of my profiles, and I can zoom out now and show you what we're looking at, okay? Based on where we are, I have a lower range here, right? And a rejection at the top. So we know in the bigger time frame, people buy down here and they're sending it to the top, and then they come down and pick up more, and they go back up and they sell. I want to show you something and why I started getting short here. We came to the top, but you can actually see where we start moving into pre-FOMC announcements. Same thing happened where we got a squeeze here above prior value. We simply opened above, shorted everybody here, opened above, squeezed them right into FOMC news. So what I did on the FOMC news in October, mind you, is this was the day FOMC happened. And now you tell me, what does that tell you, right? If that's as high as we can get on FOMC news, and FOMC is comprised of two things, okay? You have to understand history / current. That's what is the CPI, what is everything else, versus forecast. Okay? Now, when Powell spoke on this day, he gave everybody a 25-cent drop in interest rate, but his guidance or forecast wasn't good. Okay? So we started taking action on that. You can see that if this is value, you can see that line right there. We set that and lower and lower and lower, and then we open below it. We come back and we test prior value low, and then we trade out. You can very easily see this was too fast, too soon, so we come back up and test. Watch what happens. We come right back into value. We're looking to see if we get above, and I can show it to you. That value line. So that's the last value high before we fell. We come back, we test it. Let's just keep going. So now we come back down. We're now accepting this, okay? You've got to be worried that this no longer is valid. And look at the line. Okay, we now are accepting lower. Now, we tried on one day to get back up to the top, and you can see the definite line between what was over and what was under. We go back up and we retest where we had fallen from. So we have that. Let me turn off my price right now. Okay. But you can see how that basically comes back to there. We tried to hold above, lost it. Back check down. Come over, try and push back to the top, lost it down. We're looking here. Can we get back above that guy? Let me turn off my profiles again. Value. Okay. It becomes very evident where value is accepted and where value is being rejected. Okay. We had value up, reject prior. Great. We open here, tried to get back to value, reject it, and we're going to trade all the way back through. We know that that's a line that we held before. We can't get back up to it. We're going to trade off short. And you can carry these levels all sorts of places. So we got under, we went out, we came back. What did we do? We tested low. We had support. We're now moving back to the top. And now we're going to be doing something very interesting. We're pushing towards FOMC. So push, 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 multi-day slight growing. Okay, there's FOMC. Now, pay attention. Guidance was not good. They got their 0.25% discount rate. Next day we push to the top. Next day, all we do is sell off. Come back, test the value high from 2 days ago. Nope, stuff. And we're off. Then we test the POC/value high from prior day, trade down, try to get back to it. That doesn't work. That's what just happened today. It's simply, are we accepting or rejecting prior day value, and where is it most likely to accept and reject? Okay. If you're testing from below POC and value high, and we like to cover POCs, by the way. If you can find a POC that hasn't been tested, good for you. It doesn't happen very often. It did not get covered here, which is interesting. The other thing I need to show you, by the way, when we had the FOMC from before, slide it. Okay. We had accepted the value here. Do you see it? Check back, came to the top. When they moved it up overnight, everybody who had a short position there was screwed. That's a squeeze. All they did was squeeze every single short trader in here. And then the next day they did it again. And the next day they did it again. Where? To get to the FOMC news so they would be in the highest position possible for the next sell-off. It's pretty amazing. So at all times you have bulls who think it's worth more and bears who think it's worth less. And you're simply tracking that. And as we got into compression here, I'm waiting for this. If that's all you can give me after an FOMC, I am going to go the other way. It usually happens the next day or within 2 days of FOMC, and you can trade that. This is probably, so on these bigger days, that's about an 80 to 88 point swing. So if I'm drawing my ATR, okay, that's an ATR on a day that we're starting to get volatility. If you look at these days, it's like half of that, okay? Compression, compression, compression. They don't want to be up here, but they're being moved up there, okay? We have 1, 2, 3, 4, 5, 6, 7, 8, 9. Then we hit volatility and we're back to full ATR. When you know that's coming, let it go. So we have now lost, but at the end of the day, held that line. Call it 6,800, 6788, who cares? I call it horseshoes and hand grenades. So, based on open, high, low, close, right? This is fairly well balanced. So, can we test yesterday's POC? Yes, we could. But I'm thinking we're going to trade in this area, testing up and testing down. And where we open will also, now you can't see when we're just in RTH where we will say no to. But you can see where it went back up there right to the end of the M period the day before. It went to POC earlier. There's some really interesting things that you can pay attention to on where value. Now, at the end of the day, we said no to value from Monday. Tuesdays tested it? No. So we're saying right now, and if we go to expanding out the electronic trading hours, takes a minute, sorry. Okay, where have we gone? Well, we're rejecting value high. We should. Don't pay attention again. We're looking at that's where value was. And if you have to, draw where value was before. We've rejected it. Tomorrow, are we going to test this again? That would be my bet. And then we have the opposite side of the equation. We said no to that. So we're looking to trade here and either reject that or reject this. My guess is we're going to reject that if we're on a downward trend based on everything I'm reading. So we traded lower, tried to trade back high, ended M period low. M period low. I'm still getting cues that we're trading lower. Now, this is on the December contract, so it's showing a lower number. You need to be able to jump in and look at the December contract. March contract. Let me bring that over. And putting them together will just mess with your head, okay? Again, we had FOMC, and that's all we got, and we start selling. I'm with it. You gotta pay attention to what the market said to FOMC. Now, during that day, we got a nice little squeeze up here, and we got volatility. We went up. If you look, here's what's amazing. I need to turn on extended hours for a second because I want to show you something. Where's my studies? It's not here. Hold on. Let me add. I'll add it here, see if it will let me. Otherwise, I'll bring up something else to show you my point. Yeah, it's not showing it to me because it's not volume based. Let me get something that has volume based on it, okay? ES. There we go. I have to bring it over. Give me a second. I don't know if it is on. Let's see if it's on the new contract or not. So here's volume based, and it's only under RTH. So let's turn on ETH. So you don't see it here. I'm going to change something for a second. I need to duplicate this chart. So duplicate chart. And chart settings, linking, turn it to, just set it to 20, so it won't link out. Charts, nope, didn't want that. Chart settings, and we need to change the symbol to last month's contract, last quarter's contract, December. Okay, and okay. Let it load. Remember when I said you had to be a detective? Here's a piece of it. On FOMC day at the end, this is FOMC day. I want you to look at that guy right there. 2,360 plus another chunk up above contracts went out at the end of FOMC day. If that doesn't get your hair to stand on end, and they did it during settlement after RTH close, that's not even, that was after 4 p.m. I mean, excuse me. Yeah, that was after 4 p.m. at the very, very top. So I'm looking at what happened after hours. Somebody put something like that on the board. If you're not paying attention, you're in trouble. So that's when everybody got the news. It's at the top. They need to transfer to the new contract, and that was at about 69.20. And they got in right about in here at 69.20. They start adding into their positions. Okay. This can make it very messy during the day. We had a lot of volume coming in to the market today, and a lot of people were misreading what it was saying because we simply have people transferring from the prior contract into us. So there's 1,000 came in here, 850. We're simply just getting volume transferring over from the old contract to the new contract. And it's quite dangerous because people don't know if that's a sell, a buy, a what. What are they doing? Any whoosie whatsies. I should show you when I'm trading during the day. Yeah, there we go. Okay. This is EH. Okay. No, this is NQ. Sorry. NQ. You can see by the numbers. The asks are right here. This column is the asks that have been changed. Either we've lost asks or we've gained asks. Same with the bid. Have we lost bid support or are we gaining it? In addition, right? So here was market close. We're simply trying to get back up there. And at market close, that would have been an opportunity to take a short position right there. We're a little beyond it right now. But that would have been, if you were watching after hours, a very logical place to get in at 370 and put a stop up here at the high of day, which we rejected. I mean, that's a great entry. In fact, I might just, why not? I can carry a contract overnight. Now that I'm looking at it. I got to move this out because it does have my info on it. So I'm going to sell to. Okay. And if I look at, it's not going to show on the NQ because I was trading MNQ. So I'll show you just, I can't pull it over too much further, but you can see I just took a short position right in here, which was today's extended. Let me do something here. I'm going to get rid of my trading. There we go. All right. So when I'm trading, I want to know what my ATR move potentially could be. Now we're under compression today, so we didn't trade the full ATR, but I think we will tomorrow, right? Because we got confirmation. So if I'm looking at what the ATR should be tomorrow, if this was the high here, then that should be the bottom. And that should be at 40 to 40, yeah, about 400 points. Did you hear that, everybody? When it's moving, we can have 400 points of moving. Is there a slight risk that we could be up here, maybe from that entry back up to the top? Yeah, but it was a really good sell signal at the end, and we rejected prior day value, which was right there. So I'm feeling fairly confident that I would have preferred to take the short up here when I was talking to Zach earlier today, but I'm making it based on some reasonable deductions. And I can, 2 MNQ is not going to kill me. Let's get rid of that. Stop. I don't know why it's doing that. Oh well, get that out of the way. So I would be wrong if we get up here above 25,440. I'm wrong. That's all. I know I'm wrong at 25,440. So if I'm looking at a price expansion, right? 25,440. I can literally drop down here tomorrow at 25,080, and I have a 4-to-1 risk to reward. That's all. I'm looking at ATR, and it matters. So back to, here's the ES, right? There's ES. ES said no. FOMC was there. This was the H. That's the old contract. Get rid of it. Get the new contract over here. Oh. It does need some. Roll it over. Yes. So where are we now? You can see that we rejected this and we basically went close there. And if I'm looking at 88 points on ES, so 08 to 96, that should be an ATR move for ES. So do we go back up and test this guy again? Where would be our top? And that's what you need to do, is watch. You just need to move it. If that's our top, test, because that matches up with value high. right? We never got there. Then we got to POC. What's the next thing down? Is it value here? And that's quite likely. So if we are descending testing stuff, that would be the next test from below, and say no completely to value from 2 days ago. So either we're going to retest there, and that's the top of ATR, or that's the top of ATR. If we're descending, one of those two things is happening tomorrow based on acceptance and rejection of value. Now, if it's this one, I have a fairly decent entry right now with a fairly entrance at the top of ATR. If this one goes up, it'll come up here. I can set a stop loss at 70, maybe just the top of that guy at 75, right? If I'm trading ES, but I'm not. I'm trading NQ, and NQ, bring it over. Okay. So what you saw today was an attempt to get back above yesterday's value high, which we could not do. The only way this becomes up here is if we open above value here and we squeeze all of these guys and everybody today. So after market hours, if they could move it up to here, we could get a squeeze from here back up to about, oops, not price expansion. I want horizontal ray. We go up here or probably up to there if we get a squeeze, because then all of these guys are drooling that they get a better entry. So there's some things that you can plan out and say, well, that's probably the max it's going to go based on what we've got, but we sure rejected this quick. So you're probably thinking, I need to move this guy to there. Makes sense. Today, we couldn't even get back above yesterday's value, so we are trading lower. Now what? We'll see what tomorrow says. There's some fairly, reasonable expectations on where we should trade each day, but you have to do this. You have to be able to mark in what happened through the course of the days. What are we rejecting? What are we accepting? Again, this has my IB. You can see my I. When you have a narrow IB, you're going to get outside. It just is. Okay? IB, IB. We're simply waiting for that information. And all we did was push up and sell everything out at the top. It's unbelievable. The next day we open, we can't get above value, short, right there. You don't have to trade this day. If it's not making sense, we opened up low and we're going to trade back up and test things. Confirm, confirm, and off we go. So I hope for those of you who are trying to understand value, you need to be looking at volume profile, which is here. You need to be looking at your initial balance and what your profile did for the day, and then look at what the VPA said in agreement, disagreement, and where have we back checked to, and where are we finding. So when we get to the bottom of this, what you'll normally see is we'll be downward trending, and then you're going to get a TPO down here, and the next day it opens up here, and we can't get back down into this one, and then we'll start playing up. That hasn't happened yet. All the signals right now are we are coming lower. So we have an M period here, we have an M period down up here, right? And an M period. This is still trading down. Although we have wicks, we're still trading down. So I am bearish on all of it. Just above yesterday's value. Did we really reject this? I don't think so. Not really. We rejected this, the upper one. Anything above that value line right there. You could say it was volume. You could say it's value. They're close, right? We rejected up here. And so that's the big line for tomorrow. I don't think we'll go above it. If for some reason Europe wants to try and push up there, they'll just sell right back into it the next day. That's what I got. Hopefully you have some time to watch this over the next couple of days. Ping me if you have questions. Bye.